Boom. And we are live, ladies and gentlemen. I hope you're all surviving September. That's where we're going to be starting the video off, guys. Welcome to our first ever live stream here on the channel. And what a day to conduct a live stream on the back end of the non-farm payroll number. And of course, the jobs report, which we're going to be getting into in this live stream. We're also going to be looking at how the markets reacted to this, looking at forward guidance for rate hikes and everything in between. So this is absolutely going to be a jam-packed live stream. And I think the best place for us to start is by reminding people how September typically plays out in regards to Bitcoin's average return. So we're going to go ahead and dive over to some charts. We are going to be starting things off by taking a look at how Bitcoin does quarter over quarter. So let's go ahead and pull up the charts. And you can see here, if we look at Q1, typically some of the best returns come in Q1, Q2, not so bad. And Q3 for Bitcoin is typically the worst performing quarter of the year. And that's the quarter that we're currently in. It will, however, come to an end in October, setting us up for the best quarter of the year. And we very much think the markets are positioned in that manner. The dollar, which we think is going to be the real macro driver in regards to markets doing well, has found some support. It's currently finding support. We'll get into non-farm payroll and everything related to it because I think it's introduced quite a bit of uncertainty. And when you look at Bitcoin, you know, this pullback that we've been going back since March, it's really been trading in much the same manner as an unloved commodities future, which we'll talk about when we dive over to the Bitcoin chart. So the quarter that we're currently in is typically the worst performing one. And if we look at month over month, you can see that September is typically the worst month of the year for Bitcoin. Now, I'm not sure if we would have seen the worst month for Bitcoin this year in September. It's still kind of too early to tell. Certainly last month and certainly April would have rivaled on the back end of, or going into selling May come back and St. Legis Day, the sort of return that we've seen thus far. But September's typically a very negative month for the cryptocurrency space. Certainly Bitcoin. However, the good news is that October and November are typically the best. So we think we've got a great sort of second half to the year to come. Rectember very much playing out as expected. So it's very interesting, isn't it? The seasonality in markets. Of course, this goes all the way back to when markets was agricultural, and they all sort of revolved around the seasonal cycles there. If we look at Bitcoin, and we're going to cover Bitcoin to death in this live stream, probably go on for about an hour or so, it still looks good in the broader or the grander scheme of things. However, certainly in the short term, Bitcoin has very much been trading like an unloved milk futures or something like that. If you look at it on the kind of longer trajectory, certainly in a logarithmic manner, you can actually see that this pullback appears to just be that. However, when you do take it off log, it kind of introduces the volatility that we've seen, certainly when you dive down to the smaller timeframes and analyze this pullback on its own merit. You know, these moves are gigantic. It's no surprise that altcoins have been sort of capitulating under the weight of the cryptocurrency space. You can see the kind of moves that you're having here for the space. You know, a 17% move for Bitcoin at the start of March, all the way up to a 19% move to the upside, all the way to, I think, sort of 23, 22% move to the downside, all the way up to a 27% move to the upside, so on and so forth. You get the picture here. And I really think this is symptomatic of a lack of interest in regards to the cryptocurrency space. There's just no volume there to kind of counteract the pressure to either the up or the downside. And actually, if you look at how today's market action is playing out, Bitcoin currently 3.5% down. It's another brutal Friday. I feel like we've had so many of them. However, today there's no kind of news or major news, geopolitical news attached to it. You can really see the lack of interest in the cryptocurrency market by looking at the fact that Bitcoin is 3.5% down today, Bitcoin dominance rolling, and the altcoins, which are typically a higher beta play to Bitcoin, aren't selling off to the same degree. That, if nothing else, shows you a massive lack of interest in regards to the crypto space. If you look at things like Google Trends, even here on All in Crypto, we obviously pay attention to viewership. We're at sort of bear market lows in regards to interest in the cryptocurrency market, which is typically when we are when a market is very much basing. Of course, Bitcoin has already based, Ethereum, Solana, the ones that have seen that institutional involvement. But the altcoin market generally is still basing ready for the upside to come. And we'll talk about the macro drivers when we get into non-farm payroll, the sort of broader implications of this, shortly. So Bitcoin, to go back to the chart, very much trading like an unloved milk futures or an unloved futures of some sort. Certainly commodities futures often get completely thrown to the wayside, but you can see the volatility here. And if you look at the altcoin market, just to put an altcoin up here, so let's find something like Ethereum, or perhaps maybe even stick HBAR on there, one of our favorite altcoins. You can see that they very much are just following Bitcoin, because it is still the tide that rises and sinks all ships, and just really capitulating under its kind of weight, if you will. The good news is, if we've got the broader trend right, which we believe we have, and we'll speak about some of the macro drivers, we believe you're potentially in the shorter term looking at 130k Bitcoin, in the broader term looking at 151k Bitcoin, all the way to a potential $309,000 Bitcoin. It's very common. We were always going to run into resistance here at all-time highs. It's very common that you pull back around your all-time highs. In fact, if I dive over to my stage 2s and I pull up Vanex Semiconductors, you can see it did very much a similar thing in very much the same manner, and ultimately has led to upside. Again, we were using the same predictive mechanisms for Vanex Semiconductors as we're using for Bitcoin today, and it's very much following that roadmap. Technical analysis works, guys. I know many of you are skeptical. Hopefully we've converted some of you in regards to technical analysis, and if you're not converted, stick around for some of those price predictions that we have more broadly. We've not even got into the macro yet, guys, because there's just so much to cover, but you can see what we're identifying here. Let us know in the comment section if you can see it. I can show you plenty of examples. For example, Microsoft. Come on, all in. Remember how to spell Microsoft. I'll tell you what, let's go over to the watch list and find it there. You can see this very much did a similar thing. Something like gold on more of a broader term. Remember, we still have further upside for gold. What's Bitcoin going to do in an environment where the likes of gold, housing, stocks are all going up based on largely Dixie weakness on the back end of course, the Fed fund rate, and how that's going to drive the dollar and thus risk markets. We saw the adverse effect of that with the JPY on carry trade. But to stick to the topic at hand in regards to Bitcoin's sort of current broader time frame structure, it's very much just following what the markets do in and around all-time highs. They consolidate, typically in a volatile manner. You'll notice that with each one of these charts that we've shown you before they then start a broader uptrend, which we largely do think is going to be to come. Stick around, guys, because we're going to be showing you in regards to the macro kind of environment. When we look at small cap stocks, and I do this often with my Patreons, great group of people in there that I'm very fortunate to have, certainly during times like this in the markets, very low interest. It's a very frustrating market. And a quick side note on that is you deal with what you're given. You have no sway over the markets whatsoever. You roll with the punches, so to speak. When the markets give you nothing, you deal with it. When they give you something, hopefully you're positioned for that something. And what we really try and do is use technical analysis to position us for that something. But back on Vanex Semiconductors, you can see the volatile manner that this typically takes place in. This is largely where Bitcoin is today. We'll look at small cap stocks because they're all pointing in that upward direction. And ultimately, we think this is in line with where we think crypto is going and the macro environment generally is taking us. So just to sort of wrap up on Bitcoin, it's unfortunate. Altcoins just largely capitulating under this. But as long as we've got this broader trend right, altcoins typically, other than today, probably due to a lack of interest, will overperform and certainly underperform on down days. But as long as we've got the macro right, happy days. Now let's talk, of course, about the data that we had today. And specifically, there was quite a bit of data today. You had revised GDPs for the Eurozone. You had a number of things kicking off in Europe. But the data that we're specifically interested in is, of course, non-farm payrolls, which is the jobs report, obviously excluding the agricultural sector, that comes out every single Friday, and also the unemployment rate. And I think markets certainly were a little bit shook in regards to the data that we had last first Friday of the month, because we had a massive underperformance in regards to jobs added to the economy, and also a rise in unemployment. And the typical correlation with unemployment is when unemployment's at a low, markets are high. When unemployment's at high, markets are low. So there's this kind of seesawing in regards to unemployment. Today, there was a bit of good news, but not spectacular in regards to unemployment coming down to 4.2. And the non-farm payroll number missed expectations, not by a massive amount, but was certainly better than the previous one. And this is what I mean by a bit of a limbo in regards to the markets right now. They're not, this wasn't definitive to either the up or the downside, either the positive or the negative. It really just showed, okay, unemployment perhaps better than expected, but something like jobs added to the economy missed expectations, but better than the prior. You can see in Canada, you had unemployment rate, which upticked. And then you had average hourly earnings also on the up, which is a good sign. Lots of reports coming in regards to this. You can see this is monthly job creation in the US. A real downtrend. We'll get into things like the yield curve and all these other things towards the end of the video. But one thing I want people to remember in regards to the current environment that we're in is it's not a normal one. And I think all of that comes on the back end of March 2020. Just think about what took place in and or after March 2020 in regards to the locking down of economies globally. This is the first time, certainly in my lifetime and many of yours, that has ever happened in an economy that hasn't resembled anything like when you had the plagues of the past. And there's going to be a lot of things that are sort of skewed as a result of this. So it's always worth bearing that in mind, certainly in regards to indicators, historically accurate indicators. A lot of them are getting thrown out the window. Our opinion is that we think the markets do very well, and we can show you, and we're going to get into why we think that is. We cover it daily on the channel in our market updates from a sort of macroeconomic point of view all the way down to a sort of technical small cap or altcoin point of view. But if we look at monthly jobs reports, you can see there was a lot added to the economy as it started to open up. And then you've seen this sort of downtrend, which I think is quite natural. Depending on who you listen to, this is still not such a bad jobs report. But in the wake of the previous years, it is. But there's, of course, been that whole ramification of what took place from March 2020 onwards, which they're very much sweeping under the rug as a little bit of a side note. If we look at the stock market, I mean, we've just got news from CNBC that Europe's stock ends week down 2.5%, worst day since early August slump. They always like to promote those big headlines, but August really wasn't that long away. And the S&P 500 slips, heads for the worst week since April. If we look at the S&P 500, for us, again, something that we were very technically right on. We really just identify stages in a market, phases in a market. We still believe this is a phase 2 uptrend, and we haven't seen topping structure yet. Lots of people worried about this being a double top, but I think this is very common in regards to, remember, there was a lot of the JPY unwind on this. Then there was a kind of, I guess, overreaction to that and a reallocation on the back end of it. We definitely had news that institutions were buying from all your big banks. Also in crypto, on the back end of that kind of yen unwinding, we had news from Binance that they saw nearly record inflows in regards to actual cash entering the exchange. But if we look at the S&P, this, in my opinion, is still an uptrend, and this is just, consolidation at a high point, if you will. I don't think there's too much to worry about here until there is. We do have a number of stocks that we're looking at. We'll be talking about Tesla tomorrow. Now, I think we are moving towards a world, unfortunately, guys, for those car lovers out there like myself, where the majority of sort of travel with the automobile will be done automatically, in the sense that there'll be self-driving cars and all these other things. Real shame, but that is the world we're moving towards. Of course, they're going to push this from an economic point of view or an eco-friendly point of view, also economic, because if you look at how cars are used, about 95+% of the time, they're just sat there idle. They'll come up with car sharing models. They'll solve, of course, health issues related to pollution, but also related directly to car crashes. Very interesting. If you solved people crashing in cars and dying as a result of it, you'd cause a bit of a problem in regards to organ donations, because the majority of organs that are donated to individuals come from car crash victims. A little bit of trivia for you there. But when we look at the stock market generally, we've got stocks like Tesla, to stick to the topic at hand, that we've got a number of confluencing patterns for. We ultimately think this is going to double and then some. We're still looking at higher targets for Amazon. The data today, I think, was really just non-conclusive. And the stock market, obviously, it's not just going to go up in a straight line, but there's many stocks, including small cap stocks. I want to run you guys through. I don't see people doing this on YouTube. and I do this with my patrons often, a lot of small cap stocks, because the way that they're positioned, and then we'll dive into the dollar and everything else, is very much ready for upside, which aligns with where we think crypto is going, where the cycles are going. You know, we can cover so much in regards to the Bitcoin 4-year cycle, in regards to global liquidity cycles, PMI cycles, election cycles, Eurozone business cycles generally. They all point in the same direction. There's technical confluence there across the board. So when we see headlines like this that are meant to sort of, I guess, worry people, we always zoom out and talk about it on more of a macro kind of perspective, if you will. But I want to dive through a load of sort of small cap stocks. You know, this is Robinhood, something that we were looking for basing. This has made our first target. Very much a breakout, a retest, and you're likely going to see continuation. Spotify just done spectacularly for us since we were looking at it down here. This is the small cap stock market. Remember, Stan Druckenmiller positioned into the IWM. He went from NVIDIA down to the IWM, and everyone was clowning him for it. So he's betting on small cap stocks right now. What's that environment going to be to see small cap stocks do well? It's going to be one that's going to see risk do well generally, and it's all going to come on the back end of the Dixie, which we're going to be talking about. We'll dive into rate expectations and others. But if you look at small cap stocks, you can make money on all of these guys. This is a firm holdings. You can see the positioning breaking out into new all-time high. FTSE's recently broke out into new all-time highs. Dow made its target. Obviously, we spoke about Vanex Semiconductors, something like Cloudflare. You know, you can see HubSpot. All of this kind of breaking out into new highs or basing ready for upside sort of a point of view. Obviously, you've got Iris Energy. I think miners, there's going to be a kind of AI play with miners. Not such a great example, but something like Adobe broken out, ready for upside. Toast, very interesting stock that I'm unfamiliar with. But there's lots and lots of stocks. You can see they're all sort of positioned. Markets move in waves, ladies and gentlemen. And a lot of your small cap stock market is at this kind of conjunction point here, which those of you that follow the altcoin market will know it's in a similar point. Ready for this upside, which has, of course, got to be driven by the macro environment. Because if the macro environment doesn't permission it, just like if Bitcoin doesn't permission the altcoins to run, it won't. You can see where a lot of these stocks are that we're sort of highlighting, if you will, along with, by the way, housing and everything in between. So let's go back to our watch list. Let's just pull up some sort of housing ETFs. Certainly in the US, UK, Europe, housing looks similar. Again, you can suspect housings do quite well, obviously on the back end of interest rates being lowered. What's crypto going to do in that environment? And this is why when we see sort of headlines like this and we get news like what we've had today, it doesn't really worry us too much because it's uncertainty in what technically for us is certain in regards to direction the markets are going to take, or certainly technically signaled. So these are just some housing ETFs, obviously higher targets for gold, higher targets for so many things, including crypto. You know, we spoke about Bitcoin, Total 2 taking a real beating. We were highlighting this is where we've really been accumulating crypto during this time period. To be fair, in the Total 2, you've got a lot of Ethereum, got a lot of Solana, a lot of coins that have performed very well. The cryptocurrency market probably at the moment is more here in regards to the altcoin market, ready for this to come. And of course, the ones that have front ran have done exactly that. So we've spoken about quite a bit there. In regards to the economic data that we had today, it's kind of lackluster. It's not definitive. Of course, you don't want to see unemployment really accelerate because that's an indicator that the economy isn't doing too well. There are a number of indicators out there that they reckon due to immigration, certainly in the United States, has sort of been null and void in regards to that data. And of course, there is a factor in regards to unemployment, in regards to, how many times can you say in regards, all in relation to immigration. So do bear that in mind, but we don't want to see much further weakening. I thought we were going to get a bit of a positive or a more positive print than this. It's really indecisive. And what the markets hate more than anything in what is already a bad month, typically quarter, is uncertainty. Because you can't go forward with uncertainty. Certainty is something that you can bet upon. Whereas if you're getting, oh, well, the data wasn't as good as we would have liked it to be, and that means that, you know, there's an increased probability of this, the markets will position accordingly. Once they get that green light, which I think is going to come in the form of the Fed to show you the Fed watch tool, the Fed lowering interest rates, which they're now going to do. we ultimately think that's what's going to be the macro driver to see all these cycles play out. And just quickly to pivot into we call it an idiosyncrasy in regards to every time the Fed cut rates, the markets crash. This is simply not the case. This is from Schwab. Of the 14 rate cut cycles since 1929, 12 of them saw positive S&P 500 returns for a 12-month period following the first rate cut. There was only 2 of them where the S&P actually didn't do well. And they were, of course, on the back end of the dot-com crash and, of course, the 2008 financial crisis. The other times, the markets did well. And we're expecting the same thing to play out against today. We looked at small cap stocks there, but you can say, okay, small cap stocks look good. And we can show you hundreds. We showed you a very small number of the ones that we look at. If they're sort of positioned in that manner, if crypto is positioned in its manner, if we think the dollar's going in the manner it's going, and equities more broadly are going in the manner they're going, and then you've got this kind of data to add to it, it really kind of starts to make a lot of sense. And as we're talking about all the dollar, of course, we are going to get a rate cut. Why do we think this is going to drive the markets in a positive direction? Bitcoin getting smashed right now, ladies and gentlemen. If you look at the altcoin market, something like Hedera only 1.4% down. Bitcoin 3.7% down. Why is that? Nobody's interested. Certainly in the altcoin market, and Bitcoin is the only kind of market with any sort of liquidity to take from. And where people still have that liquidity. Let's talk about the dollar. We're seeing a bit of back end of strength. Let's just address why we think a weak dollar, and we'll get into the drivers, is going to be good for the markets. We do it all the time here on the channel, but if we look at Bitcoin, every single Bitcoin bull run has had dollar weakness baked into it. Remember, and we'll talk about this channel that we've been in since 2008 for the dollar. This is your 2010 to 2011 bull run for Bitcoin. What did the dollar do? It sold off. This is your 2013 bull run. You can see on a weak dollar. The dollar, by the way, in the Japanese candlesticks. Let's maybe put this on a 2-week chart to make it a little bit easier for people to see. You can see 2013 weak dollar saw Bitcoin do well. Strong dollar saw Bitcoin not do so well. Again, 2017 weak dollar, Bitcoin bull. Strong dollar, Bitcoin bear. Obviously, March 2020 onwards on the back end of the printathon that we saw and the locking down of you for your own good, even though we're all back to normal and totally forgotten about everything. We'll shut up about that for now. You can see weak dollar, bull market. The market's pretty perfectly topped here on the back end of the topping, or pretty much perfectly bottomed on the back end. It wasn't just Bitcoin, it was the S&P and everything else. So we're showing the correlation with a strong dollar and Bitcoin, but it's more broadly the markets. Bitcoin took a little bit longer than the rest of the markets to kind of bottom out in regards to the dollar topping, obviously due to FTX, but broadly Bitcoin's been going up since we've had a weak dollar, and we expect the dollar to continue to come down, which should accelerate Bitcoin and risk more broadly. Remember, technically things are positioned for that based on obviously interest rates coming down, which of course drives the Dixie, thus the dollar, to the downside. In much the same way that interest rates going up, even though other countries are doing it, the dollar has larger debt markets. So those implications of interest rates are far larger than the other currencies. So when they're adding to their interest rate, they're adding more demand than other countries, or demand at a greater pace. And when they're taking away, they're killing it in a greater pace. And this is why not only do we think the Dixie is going to come down based on fundamentally what happens with interest rates. You can see interest rates down, Dixie down. 2 years lead interest rates. 2 years, in my opinion, have broken down. Let's just show you that very quickly. You can see this, very much a breakdown. There was bullish divergences, bearish divergences forming on this, very much following suit. So fundamentally, we think the Dixie's coming down. We're also getting signaled that. And what that's going to mean for us, we also have a lot of technical confluence in regards to it coming down. You've been in this channel since 2008. Remember, we've shown you Bitcoin and its reaction with dollar strength and weakness. We ultimately think this is going to, for no other reason than it's logical and has found support on it previously and is currently in a downtrend, find its way here. There is also technical patterns that are playing out that see it. Actually, the technical targets run into this lower band. You also have basing in regards to the CAD USD. In regards to the Oz USD. We've got technically upside in regards to Euro USD. And this is very much following it. Bit of a pullback at the moment as that Dixie finds support, leaning on risk. Crypto just floundering like a fish under the kind of uncertainty of this all. And then we've got the British pound. So we've got every reason to expect the dollar to come down. Thus, the sort of risk markets to do well. And that's our macro reasoning for being bullish. And then when we look at Bitcoin, what we spoke about at the start and all these other things, it paints a pretty perfect picture. So when we get days that are largely negative like today on the back end of this news, really for no other reason, the data wasn't bad, so to speak. It was just not definitive in any way, shape or form. When we have news like this, the markets just don't like the uncertainty and they'll lean towards the path of least resistance, just like we do as human beings all the time. We'll often take the easy route out. But providing this is just a pullback and we're going to see that dollar weakness, we're going to see all these things that are positioned in the manner they are take place, and it's all going to be pivotal on the dollar weakness. Brighter days really are ahead, ladies and gentlemen. And we'll just look very quickly at an altcoin like Cardano. This is still very much just basing. We can show you many examples of this. Still phase one-ing. Those of you that are familiar with Wyckoff will know what you're seeing. You've ultimately got serious upside and continuation to come on the back end of this. Of course, there is a lot of uncertainty in regards to the yield curve. Every time the yield curve has uninverted, it's led to nothing good. And there's been the largest uninversion really since back here taken place recently. People say this is the largest. It's actually not. And this is the official stats from Fred. This is now uninverted. And every time this uninverts, a crash or something of the sorts, a downturn, a recession is pretty much coming. However, there is a variation in regards to how long it takes to actually come. Some 100 and something days, some 300 days. And we ultimately think this is just inverted. We've still got this grace period that's going to be largely permissioned by the dollar weakness, that risk assets are going to do well. And of course, this is, in my opinion, very likely going to see the Bitcoin 4-year cycle theory play out, perhaps annoyingly, because it kind of seems like things shouldn't be this simple. And ultimately, the markets do well, certainly up until probably the back end of 2025. In regards to Bitcoin cycles, it's doing exactly what it should be doing in and around the halving, post-halving. The anomaly really is due to institutional involvement, which is more bullish than bearish, that Bitcoin has gone on and put in a high pre-halving. It's doing exactly what it should be. It will find its feet. You're likely going to see what we've seen previously play out. And ultimately, the Dixie is going to be baked into that. And we showed you the fact that the Dixie in it rolling has been baked into every Bitcoin sort of bull market. And in regards to the yield curve, this was an interesting take. Again, talking about what we spoke about earlier in the video. Remember, we're in a different set of circumstances to what we've previously been. Lots of things get skewed and kind of thrown out the window. But this was from Ram, and he's talking about yield curve disinversion, so uninversion. Does that mean a recession ahead? Isn't that indicator infallible? It has been thus far. Correlation is not causation, a great saying. A mechanical rule-driven approach is comforting. So we all like things that we can, just like the markets like data, that they can put their foot upon. We can stop thinking and just do whatever the indicator says, but that's a mistake. At the end of the dot-com era, we had an inverted yield curve. There was a massive Y2K capex binge, fiber surplus, and VC binge. So an overzealousness towards the markets. You don't need to understand any of that financial jargon that all these financial people like to throw around, but just really for no other reason than to make it seem a little bit more sophisticated than it is. So the cause was the unwinding of excess investment, a classic sign of a top, along with excess credit. So he's addressing why the yield curve was so accurate or played out in the manner that it did in the 2000s, obviously on the back end of the dot-com crash. We had a recession in the dot-com era driven by reversal in capex spending and increase in unemployment in the tech sector. The 2008 financial crisis was preceded by an inverted yield curve. This episode was marked by a different sort of capex boom, this time driven by consumers in the retail or the real estate market, and fueled by cheap credit and Wall Street securitization mechanisms. The unwind started with a credit crunch, classic Minskian phase 3 top. We also talk about phase 3 tops. Where we stand today, we have a capex growth around AI, data centers and infrastructure, arguably crypto as well, but to a way lesser degree because it's not quite in the real world, whatever that is, like these other technologies. That's funded by cash flush hyperscalers. and government spending at wartime deficits. That capex spending is not stopping. Is there a credit crunch from higher rates? This is very interesting. Yes, in commercial real estate, rising Fed funds always breaks something. It's not tech stocks or the banks in 2008. This time it's private markets rather than public ones, which is a good sign for you and me. So everyone is conditioned for the shoe to drop and waiting for a long and variable lag when the shoe has already dropped. The credit event that a lot of people were worried about last year is in local CRE markets. Today, there is a lot of concern now about macro again and geopolitical risk and curve disinversion. And yet, we just wrapped up one of the strongest quarters of earnings growth. We absolutely did since Q4 2021. Rate cuts help consumers and small businesses. Don't confuse correlation with causation. Maintain perspective. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And we haven't seen that euphoria yet, ladies and gentlemen. And I think there's that saying out there in regards to the markets will climb the wall of worry. If you think a recession is 2 months out, get short, because the S&P will price in a recession 2 months up until the actual event takes place. So we really do think, whichever way you look at the markets right now, it's a very positive sign in our opinion, or we're getting many positive signals. Ultimately, it's just a case of riding out the volatility, which of course is exceptionally elevated in regards to the cryptocurrency space. So largely we've covered everything we wanted to cover with you guys on our first ever live stream. What we want to do now, guys, is maybe dive over to some of your questions. You know, the good thing about these live streams is we're going to be able to do them around sensitive or time-sensitive events. For example, we'll be able to stream the FOMC meetings, or certainly Jerome Powell speaking after them, any kind of pressing earnings that are coming out, any economic data coming out, to sort of watch together how the markets are reacting. But I just want to reiterate this. In regards to market positioning, we don't think there is an issue with being long the risk markets at this moment in time whatsoever. In fact, we think it's very likely that the markets are going to do well in the sort of coming year or so. So without further ado, let's dive into some questions. We've got the first question. I would say the dollar is somehow getting weaker by the week. Some big players are rotating gold before rotating to crypto. And I would largely say this is true in much the same manner that, and if you look at gold, you know, certainly we've got way higher targets for gold. Really, it's a short dollar trade. Bitcoin very much is. So Bitcoin will overperform gold in our opinion. However, the comment in regards to people rotating into gold before crypto is very much the same as people rotating into larger cap stocks before smaller cap ones. There's an analogy there, really. Certainly, if Bitcoin is a similar thing to gold in regards to really a short dollar trade, a store of value, people are going to go to the more firmer, larger, liquid one with a lot less risk associated with it if they think that trade is on before they do the smaller one. But dollar weakness is ultimately good for everything. An interesting chart to show you in regards to that specific question. So we very much agree on dollar getting weaker. We have that downside target around about 97. It's signaled in every which way. A really interesting thing that we like to do is divide Bitcoin by various assets so that we know that we're in the right place. And when we look at Bitcoin against gold, okay, it's had a brutal pullback, really, of course, since those all-time highs were met, but this is of course a key level. We ultimately think Bitcoin is in an uptrend against gold, and that uptrend is going to continue. And actually, we believe you've got targets to see that take place. So in much the same way that people pivot from large into small, like Stan Druckenmiller, for example, I think there's going to be the trade that's good for gold is also good for Bitcoin. You're going to see more performance, I think, out of Bitcoin, but potentially at a later stage. And if you look at how Bitcoin's done against gold thus far, it's overperformed. Kind of the law of small numbers there, and obviously very liquid. It's amazing to me that today we're seeing Bitcoin sell off by 3.6%. Something like ADA down 2.4%. Something like Atom 1%. AVAX 0.5%. AVAX looking strong, guys. We love to see this breakout retest. There's many altcoins that are like this. Helium is one that we sort of gave out the other day. And that is a chart that's not going to help anyone. So we'll use crypto because not that many helium charts, obviously not that trade everywhere, but look at this go. No volume on this because it's obviously the crypto chart. breakout, retest, continuation. Many alts are positioned here, just like small cap stocks, all waiting for that dollar weakness to send things higher. But great question to be brought up there in regards to gold. Leading the pack, if you will. Those big players probably can't also buy crypto. They can now in the US, but there's still a skepticism towards it. Certainly further afield. So let's go ahead and fire up the next question if there are any. I'm sure there will be. Hi, greetings from Portugal. Do you think it's a good time to buy or hold? Thanks. So we absolutely can't give any kind of financial advice here on the channel whatsoever. In regards to my own personal positioning, we've been long the markets and all of this is very public. Certainly for Bitcoin, but I'm predominantly in the altcoin space. I think ultimately it outperforms since here. So let's find a more of an altcoin chart to show. So let's use total 3, which is predominantly altcoin market. This is where we got back into the markets after getting out round about here. We're never going to time the perfect tops and bottoms. I think there was largely a luck element here with the altcoin market. And certainly some altcoins are still testing those lows. So it's important to remember that. If we think what is to come, personally, I'm positioned in regards to upside, which means that I've bought, I'm still buying and holding. Now, I can't say what I think you should or should not do, but that's my own personal stance on the markets, given everything that we've just spoken about. I think there's a great time ahead for the markets broadly. And I don't think we've really seen much yet. And I just want to sort of reiterate this. In regards to Bitcoin, let's use the BLX again and look at the 4-year cycles because it's useful. Bitcoin typically around about this time of its cycle, which is still following, was here in the previous one, where your altcoins are in this kind of base, was here in the previous one. It was nowhere near all-time highs. It had a rally, then sort of selling off like we've seen. And this is really where altcoins, the altcoin market is and should be, because they've not had the same driver as Bitcoin. It's all still to come, guys. There's this real amazing time ahead of us. We truly do believe that. So in regards to my own personal positioning, I've largely bought and I'm holding. In certain altcoins, it is trying, to say the least. However, you know, big sort of risk, big return. And that's what we're going for here, providing we've got the macro context right. Crypto's really just going to fit into place, certainly the altcoin market. And many altcoins, I think the space as a whole is maturing in the sense that certainly when we look at Bitcoin dominance, it really does fall or certainly doesn't rise as much as it did year over year. And this potentially could set you up in a broader pattern that sees it come down to the 20-somethings, which is when we see the broader application of distributed ledgers really come into its own. You know, we've spoken about how we're really bullish on XRP at the moment, and people hate that because a lot of people don't like XRP because of the frustration of what it's done. And actually, I've got a video coming out later where we very much compare XRP to Amazon post.com crash. And there's similarities here. Ripple is a company that is getting on the back end of a technology, and XRP is that technology that is going to fundamentally change a lot of the financial system in much the same way that Amazon was a company that got in on the back end of the internet. But you have things often get sold before they're ready, and then the infrastructure takes place. You know, you see that setting up in the charts, and then you see that continuation. Just to show you the XRP chart, not to pivot too much into it. I know some people don't like XRP. That's fine, guys. You ultimately have got to invest in the things that you see worth in. And right now, we do potentially, or I'm certainly positioned to see upside for XRP. So let's dive into another question. Will we consider another live stream at the next US Fed rate decision meeting? Yeah, you know, we're likely going to do live streams every single day, certainly when the market picks up. This is something that we want to do more permanently because there's a real value in regards to being able to interact with you guys. This is our first one, so we're not expecting, you know, we're expecting hiccups and technical difficulties and all sort of things, but, you know, we'll see how it's gone after the fact. These are only going to get better and better. And the aim for All in Crypto is to become your one-stop shop. We've got the website, allincrypto.com, and we're going to be doing a lot of live streams, you know, consistently and certainly around events. So when the Fed is speaking, we'll stream that. We'll stream him speaking. We'll probably maybe do a bit of a commentary video over it or something. All of this stuff, you know, we really want to you know, bring to you guys. And the live streams are going to become a lot more of a regular thing, certainly if they go as well as we think this one has. So that is really it from us, ladies and gents. I want to thank the 208 people watching the video. A like and a comment is always greatly appreciated. It's been absolutely spectacular, guys. This is our first live stream. Hopefully, it's gone okay. There's going to be plenty more of these to come. Hang in there. If you can survive Rectember and the volatility that is inherent with the cryptocurrency space, you shall prevail. And it's ultimately just a case of, look at Bitcoin right now. 3.7% down, the altcoin market nowhere near that. Maybe you could argue Ethereum. And it's interesting that, isn't it, what we spoke about? The larger caps, the more liquid ones are seeing the bearing the brunt, if you will, of the market action, because ultimately the altcoin market just really largely isn't moving. But to say an absolute massive thank you to each and every one of you guys that have watched the live streams and asked the questions and interacted with us. It truly does mean the world to us. We're bringing you far more of these. So the 280 of you that are watching, a massive thank you. We'll see you all in tomorrow's daily market update. A like and a comment is appreciated. And I'll catch you all in the next one. Thanks a lot for watching, guys. See you in the next.